Britain's long-term borrowing costs have hit their highest since 1998. The yield on Britain's 30-year gilts reached 5.67% on Tuesday morning, the highest in 27 years. Government bond yields are moving up around the world, in the US after President Trump renewed his attacks on the Federal Reserve, and in the Eurozone because the French government is expected to be on the verge of collapse. But how worrying is this? Well, Kathleen Brooks is Research Director at XTB. Kathleen, this is a global move in bonds, isn't it? Not just in the UK.
Yeah, for now, the UK doesn't look like an outlier. In fact, bond yields are moving at a slower pace in the UK than they are in Europe. But it still suggests that we've got fiscal stress. And when you've got big public sector debt and you've got political woes, which we do have in the UK, even if the government isn't going to collapse anytime soon, those two things are a bit like kryptonite for the bond market and also for the FX market, because we've seen also big declines in sterling today.
How much are President Trump's attacks on the Fed making bond investors nervous globally, though?
So it's been quite interesting. For the whole of August, it didn't really have too much of an impact, even though he got very involved. He was upping his rhetoric against the Federal Reserve, and he was also doing a lot of, he was also firing the head of the Bureau of Labour Statistics, for instance, after a weak payrolls report. But we actually saw US bond yields fall really, really sharply, and bonds in the US outperformed Europe. That could change in September. Firstly, September is a very different month for financial markets compared to August. But secondly, because we could see him really ramp up the pressure. This is about the time when we expect him to announce a new head of the Federal Reserve to replace Jerome Powell. Whoever he puts in that place, that will determine monetary policy in the Federal Reserve for the next 5 years. And if that's seen as being in any way inflationary, that could really set bond yields in the US, and they could change course and go much higher than they have done in the last month.
In the short term, of course, markets are now pricing in a Fed cut this month, but in the longer run, they're expecting inflation to move higher and potentially rates with it, aren't they?
Yeah, absolutely. So inflation is above target, which is a bit of a problem in the US, especially because they are expected to cut rates so sharply this year. So there's been a real recalibration of where the market expects US interest rates to be. And the trouble is there's also a lot of unknown because we don't know what the Fed, the governing board of the Fed will look like in the coming months. That's also opening a void for financial markets. So yes, there's expectations of deep cuts this year, potentially, well, 2 are fully priced in, but there's a good chance of a third as well. If we can but the time after 2026, that's really unclear. And bond markets don't like uncertainty. No financial market does. So I think if there's uncertainty in the bond market in the coming months, that will play into other asset classes, particularly like stocks.
Back in Britain, are bond markets going to force the government into more difficult spending decisions?
Well, it's interesting because I think that the bond market is actually reflective of what investors think the government will do. So yes, the bond market can force the government to do things, but it also reflects and it prices in a premium. Right now, there is a premium on UK bonds that some people will say is down to kind of the government not really having a good hold on the economy. So one of the reasons, there are a couple of reasons why bond yields are rising. One of them is the fear, like we saw in July, that maybe Rachel Reeves will be managed out of her role as Chancellor. Who would that leave to lead the Chancellor and take her place? Will that be a more left-leaning Chancellor? And that spooks the bond market. It did in July, and it could be what starts to happen in September as we lead up to this budget. Secondly, will the government be forced to get rid of their fiscal rules? Now, that has been one of the key things why bond yields in the UK haven't absolutely exploded, even though we've seen higher than expected government borrowing. So if they do disband with their fiscal rules, that could cause a lot of volatility in UK bond markets, especially through to the end of the year.
We've also seen new records for gold prices this Tuesday. What does that tell us about the market's mood?
It suggests that market mood is very, very fragile. Essentially, what we've seen is gold reach a record high. It's remained elevated all year. Gold returns are outperforming global stock markets. When that happens, you know that investors are looking for an alternative safe haven, and that is being found in the gold price. The gold price looks unstoppable at the moment. Momentum is very much to the upside, and we don't see that changing because firstly, it's a safe haven when there's lots of public indebtedness, and we know that's the case in Western governments, and secondly, when there's a lot of political turmoil. So you've got people accusing big hedge fund bosses accusing Donald Trump of being an autocrat. You've got political woes in France. You've got political woes in the UK as well. Those things are really positive for the gold price, and we expect it to continue to rise and for life above 3,500 for the gold price in the coming weeks.
That was Kathleen Brooks of XTB. Don't forget, you can watch more videos on Reuters.com.